Well, looking at the headline that the business day is running with today, Jonathan's moves sending right signals to investors. That's according to AfriInvest. What's your assessment of the political situation at the moment and the impact it's having on the broad investment community?
Yes, we think that the political situation is definitely having an impact on the market performance. You would recall that last week the market appreciated by 1.63% against all odds compared to 5.31% appreciation the previous week. So, but for the activities of profit takers, one would have expected that the market would show a stronger positive performance. So I think it is right to say that the political situation is having an impact on the market performance. However, we expect that the effect would not be prolonged. We expect that going forward, as the acting president intensifies effort to assemble his new cabinet, there's information that up to 50% of the outgoing cabinet may be returned. We expect also that there would be inclusion of fresh blood in terms of bringing in technocrats into the cabinet, which would certainly help to drive the reforms in the priority sectors that have been identified by the acting president. So coming into the new week, we expect that the political situation should begin to strengthen the confidence in the capital markets.
Well, talking about the key sectors that are being seen as priorities, one of them is, of course, the oil and gas space. We've seen some results filter through within that arena. African Petroleum recently released its Q3 results, turnover dropping 3.5%. It also made a loss of 5.5 billion naira, which represented a 186.7% loss. What did the market make of those numbers? Surely some disappointment coming to the fore there.
Yes, the result of African Petroleum PLC was not particularly impressive. It showed a loss in PAT as at September 2009 of about 5.5 billion, and you would compare this to the similar period in 2008 when the company posted a positive performance of 5.1 billion PAT. So naturally, the investors are unhappy with what they have seen in terms of this result. But as analysts, we've taken a closer look at the company's financials to try to understand what exactly is responsible for this situation. And what we observed was that the company had to take on huge loan of about over 100 billion naira for it to finance its activities, because the bulk of the funds expected from the public offer the company did in 2008 had not yet come in. So the company had to take on loans to finance its activities, and the effect of that actually was evident in its overhead as it shot up significantly. Hence, the company couldn't really turn out a positive result. Also, we also observed that they had to make a 17.5 billion naira provision in their balance sheet to pay off some of the accumulated losses that they inherited in 2000 to NNPC. So all of these factors put together seem to have actually dragged down the performance of the company. Now, our own opinion is that the company has probably taken a big bet approach to take out all the bad news at once into their financials, so that going forward, we can see a stronger performance. So we would recommend right now that investors should not be in a hurry to just dump the stock. They should take this as an exceptional item in the company's books. And going forward, we expect that as the company has been able to recover a significant portion of their 2008 hybrid offer proceeds, we expect that going forward, they should be able to sustain the performance.